Welcome back. The insurance group Sanlam reporting a record profit in the first half of the year. Profits up by 7% to nearly 12 billion rand in the 6 months to the end of June. The group says its general insurance, life insurance and credit services have done well. Sanlam's investments also bringing in higher returns based on the performance of the JSE in the last year. The CEO of Sanlam is Paul Hanratty. Paul, good afternoon to you. You say your new business volumes were up by 7%, partly because of insurance inflows. Where did that new business come from?
Oh, Stephen, remember we're working right across Africa and India as well. So that's, across the board. Our biggest new business flows were actually investment flows and general insurance flows. I think the latter have been, elevated a little bit by inflation everywhere because short-term insurance premiums are driven very much by claims cost inflation. And then we had slightly more muted growth in the life space, but we had phenomenal sales in the investment space, and that may be a bit surprising to people given the economic backdrop that we've had post Liberation Day. But you recall that while markets imploded, they did come back very strongly, and I think there's a good sentiment out there.
Your life insurance volumes, as you say, were quite muted. They are picking up a little bit now. Are people perhaps not able to spend as much money on the future on life insurance as they would like to be?
Stephen, we know that life insurance premiums are driven almost exclusively by personal disposable income, and of course things have been very tough for the consumer. So I think with interest rates beginning to ease now, hopefully we'll see that getting a little bit better. And there's no question that Liberation Day and all the noise around it actually has knocked GDP growth everywhere in the world, and not surprisingly in our markets as well. It's had an impact. So that is a factor. The other thing that's happened is that long bond yields have started reducing, and long bond yields were very helpful for us in the life insurance industry in terms of writing immediate annuity business, because clients like to lock in high long-term yields into immediate annuities. And as those yields have fallen and equity markets have run, so people have started switching out of the life insurance products and more into market-linked products.
It does make sense. There's been a lot of talk over the last few years about the two-pot system. It's been with us now for sort of just over a year. At this stage, do you know how much money has been taken out of your funds? I mean, are you still seeing a lot of activity there?
Yeah, look, it started to ease off, but we're talking multiples of billions of rands, and it's been a huge problem for the entire industry and ourselves to handle, because the products and the administration services were never designed for this complexity. And the complexity is added to by the fact that it isn't just the client and the pension provider, but also, most importantly, SARS. So a step in the process is now getting tax clearances, and that's proven to be quite tricky. In fact, you will find the same no matter who you talk to in the retirement industry, but we all struggled to deal with the volumes, and the public who were taking advantage of these new rules were normally people who were fairly desperate to lay their hands on cash quickly, because it's generally a very foolish thing to do. So you've got to be desperate to do it, therefore putting a lot of pressure on everybody to make payouts quickly. But you have to wait for SARS to give you the clearance. And it's quite an interesting example. We've now cleared our backlog, and without AI, we wouldn't have been able to do that. So we've used AI to develop the systems and processes to make it feasible to deal with the volumes. Without that, we would never have coped.
Sure. Is it possible to know at this stage, just a year in, what the sort of longer term impact is going to be on the funds that you manage and on people's retirements? I mean, we all know why this was brought in. We all know why people take their money out. They're desperate for it. But there will be long-term consequences for your funds and for your customers.
Stephen, it's super interesting, because while people now have access, there was a quid pro quo, which is that the rest of their funds have to be preserved until true retirement. So although you can access some, your core has to be preserved. And what used to happen in the past is that people wouldn't preserve it, and they would often resign from a job purely to get access to their funds. They can't do that anymore. So if you model it out, actually we're better off as an industry in the long run with this new system, albeit that the complexity of how it's been implemented and the timeframes has made the administration very difficult. But it's a sort of a paradox that in the short term it looks terrible for the industry, but in the long term, that quid pro quo of forcing people to hold their main pot to retirement is actually a brilliant outcome.
It's going to be very interesting to see what happens. You are increasing your investment in India through Shriram Wealth. How much space for growth is there in India? This is all really a question about disposable income there too.
Oh, I mean, there's unbelievable potential. You know, India will be the second biggest economy in the world by 2050. I've been going there for 20 odd years. And because they've had such high rates of growth, you can actually see the difference that's been made to the average Indian citizen. Wealth levels, are coming through very, very strongly. And the potential is absolutely enormous for the wealth and asset management industry in India. It's still very, very early days and a great opportunity for ourselves. One of the fascinating things about India is it's very hard to access international investments, but that's what customers are beginning, to want. So you're seeing a development of that retail market that is very similar to what you saw many, many years ago in a place like South Africa. But the size of the market and rising income levels mean that, the growth will be phenomenal.
I mean, you're someone who's been dealing with our economy for many, many years, Paul. You know better than most people. To see the Indian economy grow, to see people in India much richer than they were, in many ways a society very like ours, very diverse, a democracy, lots of competitive politics, divisions in the society too, as we have. I suppose it must be a little frightening, or a little frustrating rather, to come home and see how our economy hasn't delivered over the last years compared to India's that has.
Yeah, Stephen, I mean, obviously, it's common cause that our growth rate in South Africa has been lower than its potential and much lower than what is required to make a difference to the majority of people's lives in this country. But I must say, I think we are beginning to turn that corner. I'm very positive about it. I think there's tremendous collaboration. That is the one beautiful thing about South Africa is we fight a lot and we argue a lot, but we do tend to ultimately work together. And I think the work that's happening between business and government is tremendous. I think some of the reforms and so on that are beginning to come through actually does create a good path for our future. And whilst there will always be things that we all disagree over, I think we should, instead of being frustrated and disappointed by the Indian story, we should say to ourselves, gee, if they can do that, why can't we? And I think that if we could get 10 plus years of 5 plus GDP real growth, you wouldn't believe the difference you would see in this country. You'd have a lot of smiles on a lot of faces.
Yeah, absolutely. You're working with Time Bank and you're going to be working with them to grow your loans business. And I mean, I'm fascinated, Paul, by the sheer amount of competition we're suddenly seeing in the financial space and how many different banks there are. Do you think you're going to be able to make an impact? I mean, sort of punch through what I think is going to be a lot of noise and competition and I presume lots of adverts?
Stephen, it's interesting because if you look at challenger banks in big in the big markets of the world, they've actually really struggled. They normally get off to a flying start and then hit a limit very, very early on because the big incumbents manage to with their margins and their profit bases manage to stave off the competition. And we ourselves have always said that we would never enter the banking industry directly for that exact reason. I think it's incredibly difficult. And if we'd done it alone, I wouldn't expect to have success. But Time Bank has proven that it can be a very successful digital bank. We think that is the future of banking. We know for a fact that their cost of acquisition of a client is 20% of the next best bank in South Africa. When you have that level of difference in competitive pricing or cost base, you have a tremendous chance of success. And Time Magazine have actually ranked them in the top 100 companies of the world in 2025. Nubank have come in with us as shareholders into that business. They are the gorilla of digital banking in the world with market cap of close to $80 billion. So we think by partnering and actually then working with our own customer base, we do have a chance of success. If we were to start trying to acquire brand new customers, and with what you termed, loads of advertising, I think our chances of success would be remote. But because we intend to work with our own customer base, not to attract new customers from outside, we think we've got a very high chance of success. And my ambition would be to spend as little as possible on advertising to do it.
Paul Hanratty, thank you very much indeed, the CEO at Sanlam. Really do appreciate the time here on Daytime Update. Let's update you now on the main stories moving today. Angry Tshwane residents gather at Roslyn firms protesting against soaring unemployment. Commuters being left in the lurch in different parts of Durban following a strike by taxi operators over permits and the way police have been impounding their cars. The 80-year-old farmer accused of killing a worker in the Free State denies the charges against him. He's in the Kroonstad Magistrates Court this afternoon.